The Gold Investor Index for March showed a tick down. Here to talk to us about it today is Bullion Vault's own Miguel Perez-Santella. Miguel, glad to have you in the studio.
Thanks for having me.
So we saw the index dip down to 53, which was lower than February's number. Why did we see that dip?
Well, I think we saw the Crimea situation kind of like go away quietly, but it's still there. The rumblings are still there. So what we saw is a lot of the fast money go out of the market, but ours still continues to build. Even though there was a little more sellers than usual, we're still buying, so there's still positive buyers, and our inventories are actually built up 2 months straight in a row.
Right, and for those people who aren't familiar with the index, any reading above 50, it means that there are more buyers than sellers.
That's correct.
And so then investors are wondering, what are you expecting ahead? We're seeing a little bit of pressure on the yellow metal the past couple of weeks. Do you expect more selling going into April?
Well, the thing is, I believe investors are looking to build at these levels. They think they're cheap, and even if it goes lower, and that's usually the cause of the bigger trading volumes, they will be buying in and taking opportunity to buy more. Why? Because they see all the, let's say, variables in the marketplace that are very uncomfortable. There's no sure signs. And plus, this tapering ending is an experimental thing. We don't even know what's going to happen if it ends. So people are being very cautious, making sure to maintain part of their portfolio in gold.
So then maybe a fair assessment is you could believe the index might take a dip again in April, but you wouldn't see it go below that 50 level. In other words, more sellers than buyers.
That's correct. I still think we'll see more buyers in the positive.
All right. Miguel Perez-Santella, as always, thanks so much.
Thank you for having me.
Thanks to Miguel. And from the street in New York, I'm Joe Doe.